Okay, good afternoon, everybody. Today is August 13th. It's Friday. This is your weekly take on the market. It is 1:15 Pacific time. The market just closed. I will be your host. I'm Scott St. Clair. I'm a senior product coach here at MarketSmith. Here is the disclaimer. We're not licensed here, so we don't make buy or sell, hold recommendations. We are allowed to invest on our own, but we do fall under a compliance umbrella. So take a moment to read this. And here are the gauges. I'm just going to go all green. It was a very quiet week. At least it was for me. I felt like there was a lot of time where I wasn't really even watching the market. It didn't seem like there was much going on. You've got near the end of summer here. My kids started school yesterday. I don't know about everyone else's, but people will start going back to school. I don't know about back to work. That's kind of up in the air as far as going back to the offices, but we've all been working still. So it seems really quiet. At least it has been for me. I'm just going to go all green. The market's the easy one, definitely green. Leadership, it depends, but there's some good leadership. And then, the portfolio is going to be a very personal one. So let's go ahead and look at the indexes. Here is a daily chart of the NASDAQ, broken record, RS line peak, RS line peak at a higher price. And you've got kind of a series of higher highs there, and yet the RS line is underperforming, ever so slightly. The breadth is not that great, but everybody knows that the breadth is not that great. So I don't know if that's a good indicator anymore. The only thing that's the market always is taking all this information in and then it's discounting it. I wouldn't say immediately, but fairly fast nowadays. So the NASDAQ has been underperforming, and people have been seeing that for a number of weeks, but there's nothing wrong with it. It's really, really quiet. Look at even the price action is fairly quiet. Maybe it's the calm before the storm, but that could be a storm up and then down, fake out down and then up. Anything could happen, right? Just take it by day, week by week. If you want to know what the weather is going to be like tomorrow, look outside your window. You've got a really good chance of guessing what the weather is going to be like tomorrow. You want to know what's going to be like in a month? Pretty tough. You know what it's going to be like in a year? Super tough, right? And that's the same with the markets. You just observe it every day and make an assessment. And right at this very moment, the markets are acting just fine. Here's the S&P, a little bit stronger than the NASDAQ. I guess today would be another all-time high. I think I saw somewhere that the S&P has made 40 all-time highs this year. So, I didn't want to go in there and count it. I just took it for face value, but there's about 15 of them right there, not including these right here. So it's been a very steady uptrend. And this is your, first line in the sand, that 50-day or 10-week line, if you want to, broaden your horizon a little bit on the S&P. We talked about China. That got hit really hard last year. Last few months. Coming back, not really. It's not going down anymore, but not acting all that great. Emerging markets in a base, you are 11% off high, and IWM in a base, you are 6% off high. But historically, I've felt like IWM spends a lot of time going sideways. I mean, this is a huge sideways move, besides the COVID crash right there, where it just kind of does nothing, which is one of the advantages of being in individual stocks, right? You take more risk by being an individual stock. That's why we use a stop loss to protect ourselves in case we get it wrong, but you have a tremendous potential upside if you get it right. Let's go to the industry groups. And here, just just to give you kind of an agenda. Industry groups, then we'll do 3 stocks, or we're actually going to do 5 stocks. I missed 3 stocks last week. I was talking about the new features in Marcus Smith, those 2 new reports, and I got sidetracked, forgot about the stocks I was going to talk about, recorded it, sent it to the marketing team to drop it. And I thought, oh my gosh, can I add to this? Do I want to do that all again? And the answers were no and no. So I just left it be. So that's what happened last week. So we'll talk of, I've got 5 stocks this week. We'll kind of make that up. And then we'll do, last but not least, the quote of the week. All right, so let's pull up the industry groups. Retail department stores is number 1, 6 stocks in that group. So it's very small. Let's go ahead and open it up. What is it? Dillard's? And what's driving this? Stocks and group. Kohl's, Macy's, Nordstrom. I like Nordstrom. My wife used to work at Nordstrom when we first met. That's a great place. Dillard's. I don't know. I don't know what's really driving this action in this group. Let's see, Dillard's is a 99 RS, all I don't know if it's all-time highs, but 52-week highs. Not a group that I would get all that excited about. Energy Coal, strange group to be number 2 as well. I can't remember the last time I've owned an Energy Coal. The group is, look at the Glencore, which is in the Energy Coal group, but they're like a conglomerate, I believe. They have their hands in all the commodity cookie jars. That stock actually looks okay. I think it trades on the London exchange. And then here's it's not an ADR, but it's a, over the counter or a pink sheet, if you're old enough to remember the pink sheets. But it's basically, near 52-week highs. That's a strange group. It's probably a lot of, junk off the bottom. CEIX, these stocks have done really, really well. Wow. AMR, I've never even heard of that one. At least I can't remember. Alpha Metallurgical. So driving the group, if you're not in that, I don't blame you. I'm just, you weren't in it for this, so you're not going to be in it for that, or unlikely anyways. Steel producers, that's another story though. That's a good group with quality merchandise. Nucor broke out this week. That was one of the first stocks that showed up on my screen last week when I was doing my work. If you backdate this 1 week, you can see it was in this nice little cup right here. So that was a really good setup. So I bet a number of you got that. And it actually has, let's already jump. This is one of the stocks I was going to mention anyways. Accelerating earnings and sales for a number of quarters in a row, if you want to include the negative to the positive. So this stock group has been acting really well. Not a lot of fund ownership, surprisingly. I wonder if they're starting to build positions, but Fidelity Contra is the only one in Nucor. TX has been probably the leader. 1, 2, 3, 4, what's that? 8 weeks in a row up, coming out of this double bottom. So there's been really good progress in that group. Let's go back to the industry groups. Consumer loans, the big boy, at least the new big boy on the street is UPST. We'll look at that. Retail, wholesale, auto parts. So hospitals, it's just a kind of a strange market. So there are stocks that are moving. You just have to kind of open your horizons, be willing. I should never ever say, look, I'm not interested in energy coal stocks. That was an incredible move in some of those stocks that I missed because you kind of have a bias against certain groups. But that's the industry group action. And just an FYI, our industry groups aren't equally weighted. I think most of you probably know, but medical hospitals, let's do that easy. There are 10 stocks in the group. XYZ Hospital is not a 10% weighting. ABC Hospital, another 10%, to equal 100%. They're proprietary. I don't know exactly how it's weighted, but it's weighted towards leadership. The bigger price weighted, it's a price weighted index. So the bigger ones will have more of a weighting than the smaller ones. Just an FYI on that. Okay, let's go into the 3 stocks. Let's look at UPST. Announced earnings this week, really quite a move on the right side. What's that, 40% this week, 53% for the week. This has been quite a bucking bronco. I don't know if you guys have tried to trade this one. I've been in it a few times, but difficult to own, at least for longer periods. And I like to sell into strength. So when you get it and it's up 20 one day and then up another 20 the next, I don't know. For me, it's an easy decision to move along and wait it out. And I might miss a big move possibly, but that's okay. It reminds me a little bit of Shop, right? Remember when Shop did this after the COVID crisis? It doesn't look as steep now because of the big move that Shop has made. But if you go back to April of 2020, it looks very much like UPST right now. Let me get back to current. So I would like to see a handle. That doesn't mean it's going to build one. Big quarter. If we go to the daily, you can see here's the gap on the huge quarterly earnings right there. And last quarter, they had really good earnings as well, and the stock trended and then corrected. And so, this is a 44% cup. So you're almost at, from low to high, practically a double. So it doesn't mean it's going to have some kind of handle, but there will be some volatility involved in this one for sure. Let's check the ownership. Columbia Acorn so far is the only IBD mutual fund one in there. Let's click this button. Yeah, it's the only one that I have flagged as well. So ownership hasn't quite gotten there just yet. All right, let's look at mRNA, Moderna, and then BNTX because they trade side by side. And I'm pretty certain this is a climax top. I guess time will tell. But you've run a long way. If you look at the monthly chart, it's come from 30 to 400. So it just kind of fits within that time frame of I think what number of weeks that Bill would say before a climax top. You have your second biggest volume in a number of weeks, and it just looks very climactic. This day, it just gave back all of those gains. Let's look at BNTX. Now, it did have a base coming out of this shorter base here, stage 4 base though. So you do have this power from pivot flag on the daily. I can't see it because the stock's made such a big move. But I would probably only use that on earlier bases. And even then, sometimes they don't work. Here's a power from pivot that you wouldn't have worked. Here's a power from pivot that worked great if you somehow survived this huge 3-day sell-off, which is what that rule, the 8-week hold rule Bill created, is for, right? Is to help you survive this shakeout possibly because it's coming. You just don't know from what price. But these two stocks look very climactic to me. This is probably 45 million shares. This was 50. So it's not the greatest volume week ever. It's the second greatest volume week, but from a much higher base, 80 versus 380, right? Triple. So this is the greatest dollar volume week ever. And so you just get a lot of churning, right? And volume is a good footprint for accumulation, but it's also a good footprint for distribution. If you're a fund and you've owned this stock for a long time, you need a volume footprint to liquidate. Now, we're in just strange, unusual times. These estimates, I don't think I've ever seen a stock go from a losing $1 and change to $29, estimate and actually fulfill that. But who knows that, man? Look at BNTX, it made 16 cents and the estimate's $34. So the street is amazingly exuberant about their potential windfall as far as earnings. So that's, you know, kind of a caveat. If you own this and you want to try to hold on, I think you've kind of earned the right to do that, but I wouldn't ignore the price action. I've seen this before. I've seen this movie before, and I know how this movie ends most of the time. Sometimes you get a sixth sense, where they throw you a curveball at the end, or Usual Suspects, right? I think those are the only two movies I think I've ever been surprised by the ending. Otherwise, I pretty much know how they're going to end. And that's kind of the same thing I think about in, climax runs. MRVI will be the last one we'll talk about. So breaks out of this cup here. It's what's that, second stage base? Yeah, this is really a base on a base right there. And Marcus Smith sees it that way. That's what the B is for, the second stage base. Power from pivot up 27% in 3 weeks. Breaks out nicely. Shakeout on earnings. Here's the earnings day. But wow, really shook that off night. The next day it tried to go up, make a new high, and then gave it all back. Very weird action. This action, these last 2 days would be tough for me to hold, and have been. I got shaken out of some because it just was like crazy volatile action. But then today, or yesterday and today, just powers past all that. So it's exhibiting unusual price action, unusual strength, the relative strength well in new highs. And then you have great sponsorship in this name, which is why it's so appealing to me. Columbia, Alger, Fidelity, Franklin Growth. And if you want, you can pull up. And I've got some other funds highlighted, but I like to see Fidelity in there a lot. And you can see I've got Fidelity OTC, Fidelity Blue Chip Growth, Fidelity Advisors. What that tells me, I think about the environment at Fidelity. I've never worked there, but I bet it would be really cool to be around all those guys, Will Danoff and Tillinghast, and in the old days, Peter Lynch, and just think about how they think about stocks. And they constantly have meetings. I don't know if you've seen the interview that Will Danoff did, where he went in and to a meeting about Ask Jeeves, and that's how he discovered Google. Because Ask Jeeves basically admitted they were just trying to take a little sliver of the business, that the Google just had too much of it, and they just couldn't compete with them. And so there's constantly companies coming and going at Fidelity. So I like to see a few of the Fidelity funds have a position. That gives me a little bit, I don't know, right or wrong. I've never tracked it. If it's got a track record as far as, big winners, but I just think about them all identifying a really good name and all wanting to own that company, and especially if it's new, which this one is relatively new. Okay, so let's go to the quote of the week. I hope I don't butcher this gentleman's name, Yen Liao. And I've had this quote for a while. I have a lot of quotes that I keep, and I'm like, oh, that sounds like a good one for the podcast. So I hope I didn't typo the company he's at, Aravat Capital. Anyways, maybe I did typo, and there's supposed to be another A, but I know that I didn't get his name wrong, at least. But he said on a podcast, just because you know what the right thing to do doesn't mean you can do it. And investing is 101. We all have these rules: ride winners, cut losses. They've been around for centuries, right? But they're hard to do. And investing is, he goes, why do people think investing should be different? Barriers to entry in this business are exceedingly low. It's very easy to open up a brokerage account. If you go open up a Robinhood account and just fund it, it's easier to do that than pretty much anything else out there that involves, money. And so we have to match who we are with the strategy, which is what appeals to me, because I believe in that wholeheartedly. So CanSlim has a system. It's a foundation. If you're using it, awesome. but there might be things in that foundation that you do really well. Maybe you cut losses really quick, but you also cut some of your winners a little short because you're quick to recognize weakness and get out. Or you tend to give stocks more room to breathe, which means you're going to have some give backs on stocks that you had gains on, larger losses than normal. Maybe instead of 4 or 5%, they're 7 to 8. But hey, every once in a while, you're going to get a Square or a PayPal or Google or something, Tesla, that goes a long way and really makes a difference to your account. But it's a strategy and it has to match your personality, I believe. So knowing who you are will really help you in the market. One of my former colleagues tweeted, how people spend a lot of energy on identifying, bases and patterns and what's the right pivot point. And I've said this 100 times already. But this is where you should spend most of your energy, is understanding yourself. What's the right position size? You want to have enough that it makes a difference if the stock makes a big move, but not too much that you can't handle the volatility. That's happened to me before. I've identified some really big winners, and then 6-9 months later, I'm wondering why I don't own that anymore. And the thing is I wanted, I wanted it all and I wanted it now, right? So I wanted a big position right at the moment it's going, and you lose some of your perspective by doing that. So I spend all my energy really on trying to understand position size, how many stocks should I own, and that makes a big difference for me. I think finding the stocks with the products and services and tools that we have nowadays, it's honestly, it's relatively easy. If you're doing any work at all, if you're putting in a few hours on the weekends, trying to find ideas, maybe a couple hours during the week, you should never miss big names. These stocks that I mentioned, they should not be a surprise to you. I'm not saying you're going to own them correctly and buy them correctly and hold them correctly, but you should always be aware of these new names and new potential big winners, because you're putting in the work. Okay, reach us at marcusmith.com, 800-831-2525. I am traveling for IBD next weekend, so I don't know, maybe my colleague Arnie will follow up, or maybe I'll do one on the road, or maybe we won't have one. Who knows? We'll play it by ear depending on the market. Have a great weekend, everybody. Bye-bye.